Hi, I'm Kevin Rich, consultant with the Perth Mint. We often hear the financial media talk about risk on and risk off in explaining why a market may be going up or down. In risk on markets, investors are looking for assets they think will appreciate quickly. And in risk off markets, investors are more defensive, looking for safe haven assets. Typically, an asset falls into one bucket or the other clearly, but with gold and silver, it's a little bit more complex story. And we can see the physical flows from country to country and region that tell a story about what's going on in those markets. So for instance, in 2021, so far we've seen mostly risk-on markets on the equity side as the stock markets have been hitting consistent highs throughout the year. And gold prices and silver prices and gold and silver demand have suffered through this period. But behind the scenes, if we look at the physical flows, we see strong flows from Switzerland and Australian refineries into Asia, because demand for physical in those markets have picked up strongly. And this is a reversal of what happened in 2020 when the pandemic hit, as we saw investment flows coming into the US and UK, and Asian demand dried up during the lockdowns. World Gold Council reports gold demand is it's actually off about 9% this year to date. But within those numbers, we see that retail demand for small bars and coins has actually dramatically increased throughout the world and has consistently stayed strong this year. And we think that's a recognition that these investors have recognized inflation is a risk to the markets and their portfolios, and they're voicing that in their investment. As we enter 2022 and position our portfolios, it's important to look at these flows between countries, who's importing, who's exporting, because the destruction in demand in one region can be offset by an increase in demand in another. And it's that dual nature of gold that makes it such a great asset for your portfolio. Thanks for joining me today, and have a great day.